Now, this is also represented by what's called order blocks. And you guys know the 6 different patterns of order blocks, but the easiest one to find is actually this bullish engulfing pattern here. Now, if we really think about what's happening when this candlestick forms, I'm going to start from basically where the bearish candle opens. So let's say that this is the bearish candle open. We get a little wick pop and then we crash down. Okay, bullish candle opens here, pushes down through the low, expands up through the high, and then closes here. All right, so what's actually happening here? Well, on this bearish candle on a lower time frame, what you'll see is that there's going to be consolidation or sideways movement. This sideways movement is building up demand in order to cause an impulse. Okay, so once again, for price to move sideways, as in have a bearish bullish candle, that means that price action had to be moving sideways on a smaller time frame. Okay, now once this bullish order block closes, or this bullish engulfing closes, that means that there's now an imbalance because there were more buyers at this level than there were sellers, which drove the price up. Okay, so now price is going to go up to a level of supply where there's more sellers in order to once again try to find equilibrium. So with us understanding that there was equilibrium in this area until this market exploded up, okay, and then that showed us an imbalance. Well, where is price going to try to reach back to? It's going to try to reach back to the last point that it found equilibrium, which will be the base candle of an order block. Okay, so it's going to try to pull it back and then basically react off of it. Now, it doesn't always happen immediately. Sometimes it takes time for price to come back to the level. And then other times it'll be something like this, where it's an immediate retest and a rejection from it. So I'll show you guys a couple examples of, how order blocks play out in the market. And hopefully this will give you more insight on how to find them on your own chart. So as we can see right here, we had a bullish candle going up, huge bearish engulfing candle. This would be a bearish order block. As you can see, price comes right back up into that area, retests, and then rejects. Now keep in mind on this bullish candle, we can see that the wick came down a bit lower than the base. So the market, in order to move efficient, only had to come back and retest that wick and then give a continuation movement. Now over here, we can see if we zoom in a bit, we have a ton of continuation order blocks. So we have a bearish pattern here, bearish pattern here, bearish engulfing or bearish order block pattern there, bearish here. All right, so there's tons of different order blocks building. And once again, what you see is that price trades right back into the base of these candlestick patterns and then give you that rejection. Same thing for the upwards trajectory. So for example, bullish order block here. And as you can see, price pulls back into it, continues up higher. We have a bullish order block here, another bullish order block in this area here, another bullish order block in this area as well. And you can see that this was that level of demand that got retested multiple times. But we also did build off of new order blocks as well. All right, so this is overall how you view them in the market. And once again, these base candles within the order block pattern are representing the supply or demand in which we'd want to see price come back to retest a point of equilibrium.